Let's get across the market open now. Mark Gardner joining some MPC markets. Mark, welcome to Monday. Now, of course, the focus was on those peace talks over the weekend, which went nowhere.
Yeah.
The US describing them as a failure. I mean, what next and how are markets going to interpret that?
The bottom line is that they both walked away empty-handed, and they're both claiming they've got time on their side. So it's not good for oil prices. We've seen oil open up at 105 this morning in WTI, which is probably 7 or 8%. We'll see equity futures probably open down 1.5% in the US, and risk assets will be heavily sold today, I would expect. So Trump's escalating as he does, and he's saying that basically, even those ships, because we had 3 super tankers go through on the weekend, now he's going to start blocking those. So with the Strait is actually more closed than it was even on Friday, which was, maybe 10 ships a day out of the normal 130, 140 that go through. So, not good for oil prices, not good for petrol prices, and not good for inflation. And that US number on inflation on Friday, you can see the effects coming through already. So, that puts the Fed on watch, really, considering that there was a fair bit more hawkish talk in those minutes last week than what people were expecting. Certainly takes rate cuts off the table. So growth stocks will be under pressure, I would imagine. Yeah,
it's going to be interesting to see how the US president responds, because in fact the Iranians pointing out, they're saying the Americans should watch their fuel prices go above $5 a gallon.
Well, that's exactly right. I mean, that really, they know that he's got an election coming up, and they've got midterms, and they're not stupid. As much as the US has got a bigger military, the court of public opinion, in terms of their ability to push up the cost of living in the US by closing that strait, is a weapon in some form or another. So I would say that time is probably more on the side of the Iranians than it is the US, and you've even seen the way that Trump's really scrambled to escalate, effectively getting Pakistan to ask for a ceasefire, and then agreeing to it, and then, which was genius from Trump, don't get me wrong, and sucking them into these cease talks and making it come around a lot faster than what diplomatic channels would normally bring it. But I think he, via his actions, even knows that he needs to get this solved quickly. So and they seem to be quite far apart. And then when they bring in, obviously they're bringing in other proxies like Lebanon and things like that. We've got talks between Israel and Lebanon, but Hezbollah are uninvited on the 14th. So there's a lot of moving parts here, and history has shown us that it's not a fast-moving process. No,
mind you, nonetheless, it was pretty remarkable to get the two parties, Iran and
first time since 1979.
Exactly.
Yeah,
since the revolution.
Like I said, he knows how to push things around and use the media to his advantage, and I think that was, albeit pretty contrived, it was a genius way to get them to the table, because they've got to be mindful of, they struck the east-west pipeline of Saudi Arabia last week. They only hit the pumping stations, which means the drone got through. They could have hit the pipeline, but they know, they're very aware that if they do something like that, that brings in the allies. So both sides playing this fairly smart. You just hope that they can find some common ground soon, because another month, we're already at 43, 44 days back to normal if peace was struck today. It's likely there's no plans for further ceasefire talks. So that I think we'll see this expire, but who knows? Like I said, it was a genius move, Trump getting people to the table, and maybe he's got something else up his sleeve because he needs this over. Who knows what tactics he'll use?
Meanwhile, how are you positioned then, given this is likely to drag on and potentially get worse from here?
We've remained long triple O futures as a hedge, and that. Look, we're hoping we don't make money out of that position, to be brutally honest, because then the rest of the portfolio. But look, we're in those high conviction software names, which over the weekend Morgan Stanley did a research report on, sort of downgrading those. Many we agree with, and many we don't necessarily agree with. But we think that there's a lot of software, Australian software in there that's high quality, that still has a moat. But they talked about Xero. and the likes of Nuix, which we've got on watch, and we've broadly exited. But I think the Anthropic failure to release that Mythos or Capybara, the new model, and then the Fed having talks with the heads of all the banks this Tuesday around the potential security implications of this new model being released. I think the regulators are starting to get their claws into the pace of advancement in AI, which will help these companies. So I think the likes of Pro Medicus, the likes of WiseTech, the likes of Technology One, those energy resource planning and anything in the medical area where there is an FDA process that is unavoidable, I think they remain high quality buys.
So when we've got Pro Medicus here, so given where it's fallen to, what you would be picking it up here?
Yep, we've been buying this. We've been buying WiseTech, Technology One over the course. But yeah, some people are believers in Xero. I think the jury's still out for me. But the likes of Nuix, for instance, which is very much involved in the legal. Thomson Reuters has got a very solid program there. There's huge competition. But they were extraordinarily high PEs, that some of these companies. But and I think that Xero will do relatively well in the long run. But but there's too much risk in it at the moment, and there's other really good options that you can probably go down. We've got US earnings season coming up, starting with the banks this week. We'll start to see some of the results come out of some of those those software companies, and I don't think their earnings will be too affected, but. The fact that Anthropic's gone from 9 billion in revenue to 30 billion in revenue or run rate in the space of 2 months means that money's got to come from somewhere. You're not spending on both. So it'll be interesting to see who's been affected and whose earnings have been dented by this progress.